the Mortgage Minute today, being brought to you by our friends at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. Don't forget to get the mobile app from Geneva. RonIsMyLender.com. That'll get you to the mobile app. RonIsMyLender.com. Let's take a look at the markets today. The S&P 500 now up 0.69. 10-year Treasury down 4 basis points to 2.844. Mortgage-backed securities up 22 basis points. That is good news on the mortgage market. Speaking of the mortgage market, let's take a look at Freddie Mac. They came out with their report today. They do it every Thursday morning. The Freddie Mac Mortgage Market Survey tells us that interest rates are at 5.25%. 5.25%. They say you've got to pay 9/10 to get it. Yeah, you know better than that because you are a regular listener of Ron Siegel Radio. We tell you what interest rates really are at. Well, how do we know? Well, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgages transactions nationwide. Yesterday, the loans locked at 5.509. That's a 30-year conforming, 5.509. I know. That's not what Freddie Mac told us because their survey was done Monday through Wednesday, reported Thursday. But I'm telling you, the loans that actually locked, 5.509. 30-year jumbos were at 5.013. 30-year FHA, 5.334. VA, the best loan on the market, 5.18. USDA, 5.335. And the loan that I never recommend, I'll do them, never recommend, the 15-year conforming loan, 4.591. Why don't I like 15-year loans?
So right.
It's very simple. Home equity is high risk. I've been lending since I helped someone with my first loan, with their first loan, actually, in 1983. I was still in college at the time, but I did help them with their loan. And ever since then, I'm going to ask Jay this question also. Jay Kaplan, he's been in the lending business since
turn of the century. We're not sure which century, but
well, we know you, Jay. You actually wrote. I did some research. I had my staff do some research on you, and they found the first mortgage you did was actually done on a tablet, not an electronic tablet. It was on stone. They etched it with a chisel. I'm just throwing that out there, but I'm gonna submit, Jay, that as a lender, we never ever lend money to people who need money. We lend money to people who want money.
that's the way it is.
Right? I mean, So if you've got a lot of equity in your property and you need it right now, you're not going to get a loan. Sorry, I hate to be the bearer of bad news. Now, we're going to talk a little bit today about one loan for elderly that might help out a little bit.
Oh, yeah.
But the bottom line is for the most part, you have I just spoke to somebody the other day, 56 years old, 4 pieces of fully paid off properties. They're not working, need some money. They can't get any money out of them. Now, throw this out at you also, 5.509, 30-year conforming rate, 5.013 for the jumbo. Why is the jumbo cheaper than the 30-year conforming? Government regulation. Right, so on the higher balanced loans, they've put some loan level price adjustments in from Freddie Mac and Fannie Mae that the jumbo lenders don't have to follow those same things. They work on their own money, their rules. Quickly, why is all this happening? Well, initial jobless claims came in this morning, measures individuals filing unemployment benefits for the very first time. Reported at 218,000 claims for the last week. Represents an increase of 21,000 from the previous revised report of 197,000 claims and was above expectations of 200,000. Continuing claims decreased by 25,000 to 1.317 million, which was below the 1.32 million estimate. Remember, I've told you this, historically, every single time when unemployment starts ticking up, that means when it's bottomed out, like right now we're at 3.6% unemployment. When it starts going up, that is an indicator of a recession usually 162 days out. So it's always happened that the average is 162 days. I don't know when it'll happen. I don't know if it'll be the same this time as it's been every other time. Existing home sales came out. Tracks closings of existing homes decreased by 2.4 million in April at a 5.61 million unit annualized pace, which was lower than estimates of 1.7% decline. Supply was down 10.4% from a year ago when the median existing home price was $391,000 in April, a 14.8% rise from a year ago at 122 consecutive months of year-over-year increases. This is the longest running streak on record. No, running, not Jay, it's not running like you and I run. Well, we don't run.
No. Well,
But
we won't get into that.
but that's consecutive streak. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call 800-306-1990, 800-306-1990.